Well, hello. Welcome back to Future You, where your growth drives our communities. I'm Andrea Dolan, VP of Marketing at Future Home Loans. I'm excited to kick off another episode packed with insights to help you grow your business, better support your clients, and just stay ahead in today's market. So this week, we've got three really great topics for you. The first one, we're going to look at the current housing market, just like we did last week, and see what changes have occurred. Then we're going to talk about seller concessions and how they're really helping buyers in a higher rate market afford their homes. Lastly, we're going to have a powerful conversation about AI with our CEO, Robert Lynn, fresh off his return from an international conference in London. So let's get started. Andy, welcome back.
How's it going, Andrea? Good to see you.
Great. Let's go ahead and get started. Let's talk about the market. So mortgage rates are, of course, always going to be a hot topic for us, but we're also seeing some really surprising strength in buyer activity. So can you give us just a quick update on what's going on nationally and what agents should be looking out for?
Yeah, I appreciate you setting that up for me really well, Andrea. So first, we're in the middle of summer, right? It's towards the end of June. It's kind of the hot time of the purchase market for all of us. Let's look at three important graphs that just kind of help explain what's the market like right now and kind of get rid of the noise of the headlines that have been coming out for the last several months. First off, if you just look at the pending sales that are happening week over week, and this is nationwide, it's not specific to a market, we are having a stronger real estate sales market this year than we were in 2024. In addition to that, we're seeing some really good health in the purchase of homes in terms of mortgage applications happening week over week. You can really see 2025 having a lot more strength, even in these kind of midsummer months where a lot of people are taking vacations typically. Sometimes it does drop a little bit. You saw a little bit of a drop here just in the last week, but that's normal for this time of year. Usually it gets really hot March, April, May. June, application trends tend to kind of fall off just a little bit as people go on vacation, spend time with their families. And then we see it heat right back up in July and August. But good health coming from people interested in applying for mortgages to buy homes. And then last but not least, the thing you asked about interest rates are kind of in a range right now. They've been in a trading range, I'd say, for a couple months, and they've been dealing with a lot of unexpected kind of national news, whether it's about, conflicts overseas, oil, cost of oil, cost of real estate. There's all kinds of things that are driving why interest rates where they are today. But fundamentally, what we're waiting for is there to be enough economic data to say, hey, it's time to start lowering interest rates in the U.S. economy back down a little bit, because we don't think we're really dealing with inflation concerns anymore. And I'm sharing a jobless claims graph because I think jobless claims are probably going to be what the Federal Reserve's paying attention to, along with the other things paying attention to, primarily to say, are we seeing a softening in our economy? Are there more people out looking for jobs right now? Is there less spending going on? And quite honestly, that data has been really mixed, and it's caused the Federal Reserve to make a few decisions over the last couple months, say we're going to hold interest rates where they are for now, because we still are in a wait and see environment to see, are the tariffs going to have impact on spending? Are higher prices going to have an impact on people out buying new things? And are the tariffs going to potentially cause some employers to say, you know what, we don't need the staff we need today, and we might see more jobless claims in the future? If we see that, we could potentially see a drop in interest rates in the coming weeks or coming months. I don't know that's guaranteed. I think the reality is the cost of borrowing money right now is what it is. It's a new normal. And this new normal kind of fits the institutional average of normals with interest rates. If you look over a 50, 60 year period of time, they've been really, really low coming out of the financial crisis of the late 2000s up until the pandemic. But they've now kind of moved back to where they normally are in terms of the cost of borrowing money when it comes to a mortgage. So I would break this down in three different ways. If you have people that are looking to buy a home right now, the good news is inventory's up. Inventory's getting much more healthier than it was during the pandemic. There are a lot more options out there on homes to buy on the market at the moment. And I didn't include this graph. About 40% of homes that have been listed on the market have already experienced at least one price reduction. So for buyers in the real estate market right now, you've probably got some negotiating capabilities today compared to what you had maybe a couple of years ago. If you're thinking about selling a home, it's the same message we gave a couple of weeks ago. You got to get your home priced right, right? It's really, really important to work with an experienced real estate agent in your market to say, hey, when we go out to market with your home, we want to get the price, we want to maximize how much we can get for you, but we also want this home to move within, 30 days, because once homes start really staying on the market 60, 90, 120 days plus, people are out there looking to buy start questioning, why is this home been on the market this long? What else is out there? So getting homes priced right is key and essential to moving real estate fast in today's market. And for the agents watching this right now, inventory is growing. This is a really, really good time to make sure you're maximizing your marketing capabilities to know so that everybody in your communities know what you do, and that you really are sharp in your conversations early on with home buyers about making sure they got the right pre-approval, like we talked about a couple of weeks ago, and that they understand what their negotiating power may be. Some people might think they've got like extreme amounts of negotiating power. We're talking about maybe 5-10% negotiating power, which we'll talk a little bit more about seller concessions. But this is a great time and a great opportunity to be a real estate agent to capture more clients and capture more business in this market right now.
Some awesome insight, Andy. Thank you for sharing and breaking it down for us. Besides everything that you mentioned, any other bright spots or red flags or anything like that you would recommend agents be looking out for right now?
Yeah, I really don't think there's any red flags. This really just comes down to staying as active as you can in your communities and in your market. I think if you read headlines on a daily basis, there's some headlines that really have intention to spark like emotional reactions, get clicks. And some of those headlines could really be talking about, how the real estate market is dropping. And I think those are misleading headlines. I think we have really healthy number of sellers and buyers in the market. And I think those headlines are comparing the real estate market today to when it was maybe late 21, 22, when somebody would list their house for sale and they would get, 30, 40 offers on their home. It's just not that market today. And that market's unsustainable. We don't want that type of real estate market to perpetually happen in our communities, because then real estate truly does come unaffordable. I think if real estate continues on the traffic it's on right now, there's going to be a bit more balance on, the health of the real estate market, how much homes are costing, and how many people can afford them.
That's awesome. Thanks so much for that. So you mentioned seller concessions. So if it's okay, I'd like to kind of go into that direction and talk a little bit about seller concessions, not so much from a definition of what they are, but really thinking more on what types of ways should agents be looking at seller concessions on ways to just create more affordability for their buyers.
Yeah. So really, seller concessions in their simplest terms are the seller offering some, different concession other than just lowering the price of the home to attract customers to buy their home. And seller concessions for the home buyers really get used in two separate ways. The first way they get used is to help cover the closing costs of a purchase transaction of buying a home. And nationally, closing costs can average about $4,700, right? And if you're talking about, maybe you're listing your home for $500,000, let's just use that example because I'm going to keep that example going through this slide. Covering closing costs for a seller concession is less than 1% of what the sales price is. And it is helpful, especially for people that are kind of in a pinch on the amount of money they have available to them today to buy a home. Where seller concessions can really build their impact for home buyers is buying down interest rates. And I'm going to show you an example of interest rates. This is an interest rate chart for a very specific scenario. This is somebody looking to buy a home for $500,000, put 20% down. And what you're seeing here is what we call a rate stack. It's the different interest rates based on, all kinds of factors like credit report, loan to value, purchase price, program that you're using. In this particular case, this is a conventional mortgage program. And where most people would take their eyes as to where I have highlighted in blue, if they talk to a mortgage lender today, this is a real life rate quote. They could potentially get 7% with a very nominal points, maybe $624 to attain that rate, and their mortgage payment would be $2,661, a month. However, if they obtained seller concessions from the seller, and let's say a seller said, I'm going to put 2% seller concessions on our purchase contract with you, this specific client could actually take that 2% that the seller is offering, and they could buy the rate down from 7% to 6.49% and save themselves about $170, $180 a month in mortgage payments by obtaining that lower interest rate. On top of this, this home buyer is then going to save themselves cost of a refinance if and when rates do drop down to 6.5%. They've already got that interest rate. So that payment over 30 years is a much larger savings for a home buyer if they stay in the home for a long time than just covering closing costs. And so you have the ability as a real estate agent that if you're talking to home buyers, you say, hey, you know what? It's a possibility if we negotiate this rate and we get some seller concessions from a seller, we could get you into a much more affordable interest rate and a much more affordable payment on the mortgage. And potentially, if the seller concession is large enough, we could do both. We could get you a lower interest rate and we could cover some of your closing costs.
That's awesome. I love the example, and I would love that interest rate. That looks pretty good to me right now. How does a real estate agent go about bringing this up as an option for them?
Yeah, so really good question. So one thing I'll call out is we have a seller concession cheat sheet, right? So it's mortgages, it's real estate. Everything's going to be a little bit more complicated than it's supposed to be. But this is a real simple cheat sheet to know what are the maximum seller concessions that a client or a home buyer can use depending on the type of mortgage that they're receiving. You can see they can run anywhere from 3 to 9% seller concessions. So my biggest recommendation is if you haven't really tuned into this yet, you don't quite understand the strategy here, give us a call. We have mortgage brokers in all our communities that are experts at this. They can help set up some, what would this home cost or some what if scenarios for very specific buyers that you have, or they can just provide you this cheat sheet for seller concessions and really talk through what's the best way to bring this up if you're talking in your community about the affordability of homes, if you're trying to help people. And on the listing side, if I were listing a home for a client right now, and listen, I'm not a real estate agent expert, but I would start having the conversation of let's get your house priced right. And instead of negotiating the price of the home when people start to come look at it, get something into the home that says, hey, listen, we'll negotiate a seller concession for you instead of the home price, and that's going to boost the value to you in buying my home as opposed to buying others if they're not quite in tune with this.
Awesome. I think you nailed it in saying we are not real estate experts, but we are mortgage experts. So this is the part of the process that we really can jump in and help make this attainable. Awesome. Thanks so much, Andy. So I'd like to move us into a discussion around AI and artificial intelligence. So I'm bringing in the founder of our company, Robert Lynn. He just returned from London, where he attended one of the biggest leading global conferences in AI. So Rob, welcome back to the country. What was your biggest takeaway from the event?
The biggest takeaway is that we are kind of on the leading edge of it. We're ahead of the curve. Even the folks that are experts in the AI, really, it doesn't seem like they know where the puck is going to be in 5 to 10 years. Everybody's kind of guessing what work is going to look like in the future, what technology is going to provide for us. And, it's just, we're definitely in the room where all the action's happening, which is where you want to be. And that's the biggest takeaway. And number two is, financial companies are really trying to figure out where to invest and what to do with a considerable amount of assets that are out there right now. So the other side of that was us leaning into AI is also leaning into, getting as close as we can to the money, because when the music starts to stop and the musical chairs start to be removed, whoever's closest to the money is probably going to have the chair the longest. So that's what we're doing here in future. We're definitely leaning into those two endeavors.
That's awesome. And now I know we've done a lot here. I've had to learn a whole lot about AI to keep up with you guys. But from a standpoint of agentic AI, what are types of things that you're really focused on leaning in to help what is potentially going to change our roles in the industry going forward?
Very cool. You didn't even know what agentic AI was not too long ago.
That's very true.
Now you're asking me a question about it. That's awesome. Agentic AI is really building a bot. It's kind of like a worker, an agent that can do AI tasks for you. So versus just, hey, what am I, what here's a picture of my fridge. What can ChatGPT tell me to make for dinner for my family? That's all great. That's all cool stuff. But agentic AI actually takes it to the next level and can actually do tasks and automate work for a company, for a person, for an organization. And, that can add to productivity, that can free you up from repetitive stuff and enable you to really focus on more creative stuff, more important stuff to like a salesperson. Rather than data entry, you can focus on talking to a client, building relationships, building rapport, being more available and more visible in the community.
That's awesome. And I love to hear that. Being an empath myself, I love to hear that we're focusing more on those types of skills as well. So what types of things?
To me, I think you can't just double down on technology. You have to double down on people, because none of this technology matters if people aren't involved, and people aren't. We got a lot of people. We got to figure out how to do something. Everybody's got to eat. Everybody's got to live somewhere. So none of this works without people being involved. So we're really trying to double down on both, the technology side, but also the human interaction side. That's going to be just as important as ever, probably more important than ever.
And what types of things have you done so far and implemented here at Future Home Loans?
We built out several versions of what we call our help desk, which is a group of agentic AI that we've built out to take a question, kind of parse it down and give an answer that's not just, hey, plug in one question in. It's an agent group of bots that'll write a better question, a more thorough question, and then run it through all the LLMs and then find the best version of the answer, and then also compare that to other versions, and we start to rank the version. So we're really using all these things as tools for us. And we just launched our quantum matrix, which actually takes all that with mortgage guidelines and then interacts that with the lenders that we have, so it can actually start to help us determine the best place. I've got a DSCR loan with a foreign national, and 10% down, and then we can plug those parameters into it, and it can actually search through all of our lender partners and find you that best solution. Pretty cool stuff.
Awesome. And you have opened up that help desk to real estate agents, correct?
Yeah, it's open up to everybody right now. Help at future.loans. Right now, it's still predominantly mortgage related questions, but we are, a step for us, and that to start to train it and add in information to help with real estate questions. Hey, what title questions, insurance questions. What we want to do is build out a database of information, which is kind of like for the entire real estate industry. And how do we provide those answers and solutions and help you get there? So, you're not trying to figure out all this stuff on the fly. You just, hey, in the meantime, I can go to help at future.loans and get a quick answer that's kind of like going to the best AI LLM language model. And, it's right. It's been double, triple checked and then thoroughly vetted and verified.
Awesome. Well, thanks so much for your time, Rob. Glad that you got so much out of a great trip across the pond, as they say.
Yeah, just a lot of steps walking more than just London and eating fish and chips every night.
Thank you for everyone for listening in for this week's show, and we'll see you next week.